Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy. I'm also a co-founder of Delphi Digital, where we focus on institutional crypto research. If you don't get our research, I guarantee you're missing out. We're 5 full-time analysts who spend all of our time researching and analyzing the space. So definitely check out our site while you're listening to this podcast episode. One quick housekeeping item. This episode is strictly informational and educational and is not investment advice or a solicitation to buy or sell any security. Today, I'm thrilled to have on Jake Yocom-Piatt. He's one of the original co-founders of Cred. It's incredible to speak with Jake and learn about how he built Cred with its anonymous co-founders years ago, all of their struggles and successes along the way, and where he thinks Cred is going in the next decade. We go through Cred's hybrid consensus mechanism, its on-chain treasury, easy voting on consensus changes, and the use of the treasury through the wallet decredition, and so much more. While Cred's a smaller crypto, $250 million in market cap, it's clearly smaller than Bitcoin, but Jake explains why he believes Cred is not only competitive to Bitcoin, but could eventually overtake it. I'm a tech maximalist, so I like to stay open to new ideas and new technologies, especially given the rate of change in the space and tech in general. So I think it's a differentiated and a unique episode. It's definitely worth a listen. With that, let's jump into the episode with Jake. Hey everyone, welcome back to the Chain Reaction Podcast. Today I'm thrilled to have on Jake Yocom-Piatt. I hope I didn't botch his last name. I'm sure I did, but Jake is the project lead at Cred. He's also the CEO of Company Zero and considered one of the co-founders of Cred originally. Jake, how's it going?
It's going quite well, Tom. How about yourself?
It's good. It's sunny out, so can't complain.
Life is good. Another day, another Cred, we say within the Cred community. And, it's just another day for me. And, I'm really happy to be on here. Should I launch into some tirade about my background or should I wait for you to cue me?
Yeah, no, that's definitely step one. Just so that people are aware, so they don't miss it. For backstory, I also had Noah on. We talked about Cred's governance. Feels like a couple of months ago at this point. But Jake, give us your backstory and how you got involved.
I have been involved in the cryptocurrency space since early 2013 formally, and I thought it was, in 2011 and 2012, I'd heard about Bitcoin, and I thought, wow, that's a neat idea. The idea that you can store and transmit value outside of a bank. And, that got my attention. So I had been keeping an eye on it for, a year and a half, 2 years. And in early 2013, I had a team of people working on an encrypted online storage product called CipherTight. And, when you're competing with big time venture capital players, it's very easy, unless you have incredibly deep pockets, for a project like that to go nowhere. And so we did go nowhere with that project. And then we pivoted over to, working on Bitcoin in early 2013. And what we thought would be interesting is to create a full-on alternative to Bitcoin Core, so that, we sort of viewed Bitcoin Core as, one implementation of what could be called the TCP/IP stack of, of digital value. So we thought, hey, let's make our own implementation from scratch for this, and we did that. And that kept us busy for a couple of years. But we noticed some serious problems with the Bitcoin ecosystem. Mainly from the perspective of, the time stamping is decentralized and the value storage and transfer is decentralized. But then there's all these other things about the project that weren't centralized. Like, for example, the proof of work mining, the hash power was not decentralized at all. It very quickly became centralized throughout that period, say 2013 to 2015. And then, also the management of Bitcoin as a project is very centralized. And, before there was Blockstream, there was Bitcoin Core, where it was overtly centralized. Now it's a little bit more, decentralized, but only in the split between, say, Bitcoin Core and Blockstream. And so we saw that as an opportunity to really sort of, differentiate ourselves, because we were building this thing called BTC Suite for a while, and people didn't really react to it the way we would have liked. So we figured we'd switch it up and make our own project and release it.
No, that's super interesting. So, before we dive into a lot of the, parts of Cred, I just want to give everybody the disclosure that I do own some for quite a while at this point. But just to set the stage, at a high level, Cred is competing as a store of value, or do you see it more as competing as a medium of exchange? Where do you view it?
Our approach is really to sort of look at what was successful about Bitcoin and try to replicate it and then extend the model. What worked for Bitcoin, and it's still the case. Bitcoin is still primarily a store of value. And that you can see that everywhere. There's tons of places you might see, oh, Bitcoin accepted here, but you go and ask any of those merchants how many times, a day or a week are people showing up and spending Bitcoin there? It's almost never. So even Bitcoin itself is still primarily a store of value. So we felt that the real way to play this game successfully was to create another store of value that had properties that we thought were better than Bitcoin. And that was, that's been our approach with, the changes that we've made on top of Bitcoin in terms of consensus changes. And really, the biggest thing we've changed is really the governance system of the cryptocurrency.
That's awesome. Yeah, I know. I always, I'm a huge believer that a lot of cryptos, if not all of them, are all competing against each other. And I get a lot of pushback there. But at the end of the day, I do feel like Decred is competing against Bitcoin as a store of value. Whether or not it'll be successful, I guess it's up in the air a bit, but I do think the trade-offs are certainly interesting.
Yeah, when it comes to stores of value, it's very easy. If you look at a lot of projects, there's a lot of projects that are trying to create a use case. And we chose not to go that route because creating a use case is almost, you're walking into a trap. The use case trap is really due in no small part to the way that, say Silicon Valley and venture capitalists operate, which is that before these people will fund something, they go, what's the use case? And that is a question that allows them to understand in their minds what's going on with a project. And if you ask that question about Bitcoin in 2009, you're going to get, a variety of responses. Well, it's a currency. You can do whatever you want with it. And I feel like, Decred falls into that same category. That is that rather than trying to sort of shoehorn it into a use case, you can build all kinds of use cases on top of a generic currency.
You're not wrong there. So, one of the most interesting pieces of Decred is the consensus mechanism, but more so how you guys handle governance. So I want to go into what's your high-level take or elevator's pitch on Decred's governance before we get into, say, funding and everything like that?
Yeah, no, the idea with Decred is that collectively a group of people can make better decisions than just one person or a small central planning committee. I'm a really smart guy, but I acknowledge there's plenty of things I will miss on a day-to-day basis. So what we're trying to do is we're trying to harness the power of other intelligent people to create a collective intelligence that can make better decisions than any one person or a small group. And we're trying to do that by focusing on sort of three major facets of that process. The first is security, and I mean that in the context of majority attacks against the consensus system. So if a chain forks, that's obviously very bad, and you want to make that process as expensive as possible so that people can't, just basically step in and fork your chain and cause, grief for your users. The second facet is adaptability. One thing that was a major problem with Bitcoin was, and still is that it's very much constrained in terms of how it can adapt. If you can only make soft forks to change consensus, and the only people allowed to originate those soft forks are Blockstream and Bitcoin Core, then you don't have much adaptability. And we're trying to get away from that so that we can make consensus changes in a way that the stakeholders in the network agree. And, we can get into more about what the stakeholders, what I mean when I say stakeholders. And then the third thing we're really focusing on is sustainability, which is that we don't want to just, have another tragedy of the commons like there was with the Bitcoin network, where there's a bunch of great software being written, but then there's no one to pay for it. And then, that leads to, oh, how am I going to get money? Oh, I better take a bunch of money from venture capitalists. Well, what does that mean? Who do I owe? And what does that mean about the development of the network going forward? So we're trying to sort of build a more flexible store of value that's run by the collective intelligence of our stakeholders.
Great overview of governance on Decred, Jake. And let's start at square one here and try and attack security first. So you guys have a hybrid consensus mechanism, proof of work and proof of stake, which is pretty interesting. So I guess just walk us through what would happen if somebody tried to create a fork. Would the proof of work miners keep going, and then the validators have to then validate the blocks the proof of work miners create so it's more secure? Or how exactly do you think about security between these two consensus mechanisms?
It's really, the system, it's a cooperative system, right? Because proof of work miners create the blocks and they have a hash puzzle associated with them. So there is a proof of work component, but then there's also a proof of stake component, which is that you have people who are involved in a rolling lottery, and that rolling lottery where you lock coins up to quote unquote buy, but you're really just locking coins to get something that we call a ticket that goes into a rolling lottery. These two groups have to work together to build the chain and enhance its security. So the way the system works is really that instead of having the proof of work miners be in charge, which is how pure proof of work cryptocurrencies work, the proof of stake miners are ultimately in charge, but they work symbiotically with the proof of work miners. So as an example, the way this might work is that if somebody were to try to fork Decred, they need both hash power and stake in order to effectively fork or to fork the consensus system. And that's that places a very high bar on attacks like that. So in the case of, let's say, a pure proof of work cryptocurrency, you can double spend it by mining in secret. So mining in secret with proof of work, there's no real constraints other than, do you have the hash power? So if you have the hash power, you can execute what's called a majority attack or a 51% attack, where you mine in secret, you keep pace with or get ahead of the other part of the not malicious side of the blockchain, and then you can double spend things between those two branches of the chain. So that's obviously a bad attack, but in the context of Decred, it's incredibly expensive to do that, because in order to extend the chain, you need the stakeholders to sign off on it. So if you want to try to execute a double spend attack, it's incredibly expensive. And when I say incredibly, I mean it's roughly a factor of 10 to 40 times more expensive than a pure proof of work chain alone.
Gotcha.
And so that really, that just makes that really strengthens the security of the system.
That makes sense. I mean, just devil's advocate here. I mean, since Decred is a lot smaller than Bitcoin, even though it could be 10 or 40 times more secure on a relative basis, on an absolute basis, it's still not, say, as secure as Bitcoin though today, right?
Yeah, I believe that's accurate. I don't know what the the double spend attack costs for Bitcoin are off the top of my head. But in order to successfully execute something on Decred, the minimum amount of stake that you're going to need to have is probably on the order of about 20 to 25% of the stake. And then you would need roughly 90% of the hash power. So, with the way that the hash power goes, I think that there's, several tens of millions, and maybe let's say somewhere between $20 and $50 million worth of ASICs that are running on our network at this point. So you need 90% of those and 20% of the stake, which is like 20% of 5 million coins. You need about 1 million coins. And then that's, let's just say we weren't moving the market. That's like about, $30 million worth of Decred. So relative to its market cap, it's still incredibly expensive, but I believe you are indeed correct to point out that Bitcoin is still more expensive to attack just by merit of its market value.
Understood. So just looking at the process itself, so proof of work miners create blocks just like on normal Bitcoin, but then on the proof of stake side, users lock up their Decred, buy a ticket, which I believe costs something like 110 or 120 Decred right now. They lock up those tickets and then they vote with those tickets. And I believe that those tickets could expire or be eligible to vote anywhere between 0 and 142 days, I believe.
Yeah, that's right. I mean, the ticket life cycle is, it's a bit complex, and so I'll fill in some of the details that that were left out. Right. So hash power is, or proof of work is a sortition on hash power. The idea being that if you show up with 10% of the hash power, you're going to end up mining roughly 10% of the blocks. The proof of stake system that we have in place is similar. It's an opt-in system, the same way as proof of work is, where you opt in and you lock your coins to get these tickets. The tickets go into a rolling lottery so that if you own, say, 10% of the tickets, i.e. 10% of the stake, you end up having about 10% of the votes cast. And so what happens is that every block, 5 votes are picked from a rolling lottery of about 41,000 tickets. And those 5 votes are included in each block. And proof of work miners are actually directly incentivized to include these votes, because if they don't, they lose subsidy on their proof of work. As an example, if you include 3 out of the 5 tickets on block N as a proof of work miner, you will only receive 3/5 of the reward for that block. So there's an intertwining of incentives here, so that proof of work is sort of a standalone thing. Proof of stake is a standalone thing. But if proof of work wants to get paid, they have to work with proof of stake. And then further, what there is there's also an extra voting component to this, which is that as these tickets vote, what they're voting on at a base is the validity of the prior block's proof of work. So the prior block's proof of work could be considered or marked invalid by stakeholders, and that is used as sort of a stick with which you can punish proof of work miners, which really is just not present in pure proof of work cryptocurrencies.
That's great. And do you have any concerns that the miners in Decred could, earn their rewards of Decred and then basically take part in the proof of stake voting process? Like, do you think that there's a lot of overlap currently? And I know this might be a loaded question, as it's probably impossible to track.
We're typically, at least to date, we've stayed away from analyzing our chain deeply. Anyone who has Chainalysis style tools could really, firmly answer your question. But I believe that it has begun to happen with the advent of ASICs on our network. I believe that a number of the people involved in the ASIC mining have been accumulating a decent amount of stake in the system. And say with pure proof of work cryptocurrency, the amount of sovereignty or power that a miner has is independent of how many of those coins they sell or don't sell. So you can, if you're 10% of the hash rate, you can just dump all your coins on the open market and, no big deal. You do your thing and you still have the same power. But with Decred, there's an incentive to not do that. That is that, a proof of work miner will mine, and then they'll get their coins. And then, hey, if they want to participate and stake in the network, I'm all for it, because to me, that is someone who is committing to work with the project and try to, improve the project, participate in its governance, rather than just dump the coins on the open market and immediately, pocket a fiat edge. So, that's how I feel with respect to the mining, which is that as long as somebody's willing to participate in our staking system, I don't really see anything wrong with, proof of work miners having sovereignty.
Yeah, totally. And, just switching over a bit to the funding process itself. I mean, so 60% of the rewards go to the proof of work miners, 30% to proof of stake, and 10% to your treasury, which we'll get to in a minute. But, it's kind of funny to me. I mean, a lot of new proof of stake networks are rolling out. I mean, EOS launched last year, Tezos launched, a couple months ago, but you guys have had proof of stake live for a while now, but I feel like you don't get the press or the credit for having a live proof of stake network or hybrid proof of stake network up for this long. Do you feel any, pushback or loss of value there or anything there?
I think it's, the pattern that we're starting to see, and, this really wasn't present in the space when I first showed up in 2013, is that we're seeing a pattern where things are becoming very much, it's becoming more Silicon Valley and venture capital oriented, in the sense that if you have a big name investor, King Midas shows up and touches your project on the shoulder, it really does turn to gold. So there's there's an attention component to this, and journalists really do buy into that. That is that, rich person X investing in, investing in unoriginal project Y gets a lot of press because, that's just the way the game is played. So I think that, we're in a different position in the sense that we're an ideas first and infrastructure first kind of outfit. And it's difficult to compete once you start getting into these, like, sort of the Silicon Valley circle jerk competitions. Who has more money? Who's got a bigger portfolio of companies that, all spy on you? That kind of thing. And I'll be the first to admit it. We're pretty weak on that front, but we're making a concerted effort to to sort of improve in that area.
Gotcha. That makes sense. So let's go over to funding. And, one of the things that attracted me to Decred early on was just the ease of use of the wallet decredition, where, you could deposit your Decred in the wallet, and then you're able to purchase tickets, handle consensus voting, vote on things through Politeia. I'm always pronouncing that one wrong. So just walk us through how funding works on Decred, and then I guess if you could loop in the wallet and how easy it is as well. Sure.
Now, in terms of funding, are you asking me to talk about how the Dev Subsidy works, or?
We could start with the Dev Subsidy, the 10% per block.
Sure. Yeah. So every block is split three ways. There's 60% goes to proof of work, and we did that because proof of work equipment costs real money. 30% goes to proof of stake, and we did that because proof of stake, we didn't want the semi-passive returns to be too high, so that it's like people are just getting loaded from doing nothing, but we still wanted an incentive there. And then we put 10% into the project subsidy, so that 10% of every block goes into a multi-sig account that is then used to pay contractors. So all of these wonderful things that we have in Decred are not just, conjured out of, the goodwill of me or Company Zero. That, they come from a development subsidy that is accumulated over time and is used to build out the network. And that process, building out the network and accumulating this money, there's all kinds of natural questions that arise. Things like, who is in control of the money? So for right now, it's Decred Holdings Group LLC. It's a Nevis LLC, and it pays out to its contractors. Company Zero is one of the contractors. We're at least right now, we're the lead dev contractor, but we're having a number of other people who are showing up and doing lots of work. But then another question that comes to mind, is, okay, we have this big pile of development subsidy. What do we do with it? And what we've done, starting fall last year in October, is we've opened it up so that our stakeholders can vote on how that money is allocated and what efforts it funds. So we've been doing that now for 6, 7, 8 months. And the process there is that stakeholders who were previously involved in the voting process, where you're voting on maybe consensus changes and whether the previous block was relevant, are now voting on things like, what PR firm should we use to fund our work, to promote our work? What new projects should we be taking on? What direction should everything go? What budgets are appropriate? So that is being rolled into the wallet, as you pointed out. And so the wallet is called decredition. The idea being that, it's like graviton is the hypothetical fundamental particle that intermediates the gravitational force. So we figured, hey, this is decredition, so it intermediates the decred force. It's a bit obtuse and stuff, but through that, we've set it up so that you can vote on proposals that have been put up on Politeia, the system that we use for this off-chain governance, where you can make major decisions about the project. And then we also have it so that you can vote on consensus changes, and that part occurs on-chain and is done through either voting service providers or people's solo staking rigs.
That's awesome. Yeah, I had a detailed Decred report on 51% before we merged with Delphi, but one of the things that drew me into Decred was that just ease of voting. So, per what you're saying here, users can, with a stake or with a ticket, vote on both consensus changes and how to use the on-chain treasury itself, correct?
That's right. So we started with, the first thing we hit was the on-chain consensus changes. We did that back in, the first one of those was in spring of 2017, in April is when we kicked it off. So, even though there's all this talk about Tezos doing the first on-chain protocol upgrade, and it's like, we did that in April 2017. It's like, that's 2 years ago. And, and that also connects back to, the sort of exposure that I feel like Decred has not gotten as a function of, say, the way that journalism and the press works, in our modern society. And that's the on-chain component. And then we built the off-chain component because really, should we really be having like a long drawn out discussion about, funding and budgets and stuff on chain? It's just going to clutter the chain. So we shoved that off chain and then we can wire it back to the chain.
Got it. And yeah, it's funny, your earlier point about, who gets credit first. And I feel like in crypto and blockchain, it's whoever has the most issues that are major and public, and then they end up solving them, gets the most credit. It's just so backwards.
Yeah. I mean, I feel like it's like, you have things like Tezos, a governance project that puts money into a Swiss foundation, which is governed like totally backwards. And then, the project grinds to a halt. And so it's like that generates news. Whereas like our project's been ticking over fine ever since early February 2016. And it's like, oh, well, there's just no controversy there. So no one cares. So it's like, so what I'm wondering now is, should I crash the plane into the mountain to try to generate news?
Please don't.
No, not my style, but you got to joke about it.
Totally. And just the off-chain component you're discussing about Politeia, that is still linked to the actual blockchain itself, though, right? I mean, like if that UX goes down online, is that the end of the world, or what happens then?
Well, if you look at, other projects that are focusing on governance have actually punted on developing their own systems for this kind of stuff, where they've, for example, Dash has I think it's Dash Central, where they talk about proposals. Their proposals are actually on-chain things that get voted on, but the discussion of them occurs off-chain. So, what they have is they have a website. And then similarly, other projects like, I think Tezos and EOS have, a site where they have these conversations. We wanted to have a site that was more than just a website. We wanted something that, we can't just go and edit. Let's say you make a super insightful comment that upsets me, Tom. I can't go back in time and go, oh, I'm just going to edit Tom's comment there and change it around and, play games. So that system is Politeia. And what it is that it's a time-stamped repository of data. And as our blockchain goes along, every so often it drops an anchor into our blockchain so that you can't go backwards and change the records. And what we were trying to do there is just to make something that is far more permanent and, censorship resistant than a plain old website. And then in terms of how that connects to the chain, like, let's say we vote on a budget. What that'll mean that when funds are disbursed from the development organization, they're bounded by or guided by the budget. So if somebody shows up and tries to really overdraw a budget that has been made, that leads to natural questions about, well, should this payout be made? And that is exactly, that the funding component is really the part that ties it to the chain. Now, currently, that's a soft sovereignty system. So, for example, I, as one of the managers of Decred Holdings Group, could conceivably do something sketchy and, withdraw all the funds. But, I'm not that kind of person. I have a lot of integrity. I would never do that. But in the longer term, we need to get to a point where there is no single person who has the ability to draw those funds. And we're working towards that point. So right now, it's sort of, all of these decisions occur on Politeia. They're soft sovereignty decisions, and then I'm the person who presses the button to go, yes, this is a good one, and then payments go out the door.
Understood, totally. And do you envision a world where this treasury becomes, say, a DAO or completely and totally decentralized, or is that too magical?
No, that's exactly where we're going. We made a proposal about this just a couple months ago, and it went up for vote and it passed. And the current plan is to replace the centralized corporate entity that we have set up for the development organization, replace it with a DAO, or what we're referring to it as a DAE, a decentralized autonomous entity. And the idea here is to make all draws against the treasury, which would be a special account, dependent on stakeholder approval, so that no one can draw on that account without the explicit approval of the stakeholders. And the way that would work is that there's a bunch of contractors who work for Decred, and roughly speaking, there's maybe, let's say, anywhere between 30 and 50 payouts that happen every month to various contractors, some of whom are most of whom are individuals, some of whom are corporate contractors like Company Zero. And when all of that, that process of approving the aggregated payout to contractors every month, that would be put up for vote to stakeholders so that stakeholders can go yay or nay. That way that, for example, if there's egregious fraud or really questionable payments going out, stakeholders can raise a stink about it and then, not approve draft treasury spends.
Totally. And I mean, I'm sure since the protocol, the treasury is a bit smaller now, I'm sure there hasn't been any calls to question on, what you've done so far, but has anything ever come up like, hey, this isn't decentralized and we want it to be, or, this is centralized and you have control over it, or anything there?
There's that's a really excellent question. There's been a lot of people who like to kick up a fuss. Something that I find probably the most challenging part about the cryptocurrency space is the fudders, and trolls who show up. So people will show up and go, "Oh, it's not decentralized," and this and that, and try to kick up a fuss about it. But the reality of the Dev Fund is that the Dev Fund wouldn't have all the coins it does in it if I hadn't had Company Zero do work without pay for 15 months that's like a million and change in dev costs that I burned just because I knew that to get the project to the point where it would be self-supporting, the exchange rate had to be higher. It started at like 50 cents. It went up to 150. It went up to 250. It went down to 42 cents. 2016 was a very interesting year for the project. And, once the exchange rate started to improve, it became clear that, the project could self-sustain. And as much as any of us want to do something in a decentralized fashion, what was it? Ethereum's the DAO served to demonstrate very clearly to me that you can't, if you try to rush too quickly towards big ideas, they can blow up in your face very, very seriously. And I don't want that to happen to Decred. So rather than, try to cut the quickest path and the quickest and dirtiest path to something that works, we're doing it one piece at a time. The first piece we gave people was sovereignty over consensus changes. Now we're in the process of rolling out sovereignty over all the major project decisions and funding stuff. Then we're going to close the circle with, the sovereignty over the spending of treasury funds. So, as much as I want to snap my fingers and have this stuff show up, it's literally years of work and engineering to do this right. And, and that's sort of what you and a lot of other people are seeing if they're following Decred.
Well, no, $1 million at 50 cents back then for your work is at $30 per Decred now. That's what, $60 million or...
Yeah, exactly. So it's during that first month and what is it? Like 15 months from February 2016 until May 2017. The effective exchange rate wouldn't have supported the dev work that was being done. We would have drained the treasury basically to zero in doing the dev work we did. And as a function of that, I thought that the only reasonable way forward was to just do the dev work, without funding. And for me, I'm somebody who really I'm here for the ideas. I'm here to pursue things that I'm passionate about. And if I lose $1 million, I really don't care. And so, I felt that was really the only reasonable way forward.
Yeah, no, I guess people could see that, hey, here's a guy that left, say $60 million on the table. He's altruistically building this. He could be the gatekeeper of the treasury for now or the ticketing process for the proposals because he has a plan to decentralize it over time. I think that's logical.
Yeah, and I appreciate consideration and, people seeing that I'm trying to do this as correctly as possible. It's easy for people to sit on the sidelines and criticize and be like, oh, it's not decentralized enough and Jake's a jerk and I don't like him. There are definitely some people who do that. In fact, we had a little exciting episode with somebody on Reddit just a couple days ago. And, this process is going to involve, a lot. Doing something significant, in any domain is always going to upset someone, whether it's the decentralized exchange or if it's, decentralizing the treasury or any of these things. So I'm ready for that. And, in terms of behavior and ethics, that's, I'm here to change things as opposed to, accumulate money. I already had money before all this started. I'm just here because I want to be here.
Love that. And, let's zoom back out a bit on the treasury. Right now there's about $15.5 million in it. So I don't think the nominal value is a lot, but I think the fact that it's ongoing and forever and sustainable is really the point, obviously, until you hit your hard cap. But, I want to zoom out and get your thoughts on I want to get your thoughts on Bitcoin forks like Litecoin and Bitcoin Cash. My issues with them are, one, I believe that they're one-off changes, and I don't think making one-off changes and then having to compete with Bitcoin is sustainable. And then two, I don't think their funding is sustainable because they also don't have that, so they can't drive evolution that way. How do you think of other Bitcoin forks and whether or not they could make iterative changes over time to be competitive?
I think that, the major observation that I took away from my attempt to participate in the Bitcoin ecosystem is that without a formal mechanism for changing consensus rules at a minimum, you are really painting yourself into a corner. And, what I strongly suspect, will happen is that you're going to recreate much of the fiat financial system. The artificial scarcity of things like, Bitcoin or Litecoin or Bitcoin Cash, that's great. That's cool. I like that because then that means no one's just fiddling with the knob and inflating everybody's money to zero. But in terms of substance and where you can take a project, it's very difficult to do things of substance as a single person in the context of cryptocurrency. I mean, I feel like it's almost like running a nation state. You can be every major leader of one of these projects. A lot of them have their heart in the right places. Some of them don't, and I'm not going to name any names, but there are some people who I think are malicious in the space. But if you ask the question, if we look at this and it's like a nation state, every nation state over time the leader becomes stale. So no matter how good a leader you are for say 5 or 10 years, in the long run, I mean, a lot of people can't cut it once you get to year 15 or 20. So this subject of governance is incredibly important, but it's just not important right away. So it's easy for people to sort of wave it off and be like, oh well, I'm just going to make a couple changes to like they're going to take the U.S. Constitution, change it in a couple places, and be like, boom, I'm good to go. And it's like, well, I think to really fix this, sort of the existing system, which to me is pure proof of work, you really need to make some substantive changes. And so these ideas that you're going to make small changes around the base consensus system to really sort of, make it, to fix it, I think that they're a little misguided, even though I know a number of the people in the space who work on pure proof of work cryptocurrencies.
I follow that. I mean, I guess my take is, one, you have to be able to have a way to actually implement changes over time where you guys have that proposal process, which other forks don't have. But the other thing is you guys have the sustainable funding to fund those changes and that research. So I feel like that's pretty powerful, and I feel like you guys definitely don't get credit for that.
Yeah. I mean, at this point, I'm used to the now pervasive, VC approach to cryptocurrency. I'm just here. I'm grinding away on things that I find fascinating and things that I think will make the future a better place. And that doesn't always line up with the things that'll get you the most coverage. And, for example, like creating a sustainable ecosystem where, unless the exchange rate drops below like 15, like our burn rate right now is like between 200 and 275,000 US dollars a month. And unless the exchange rate drops below like $15 a month per Decred for a sustained period, we've effectively got infinite runway.
That's incredible. So switching over to the larger players in the space, I mean, you guys have 15 million in your treasury, but the Ethereum Foundation has 0.6% of all ETH. I think it's like 150 million. Tezos has, I think they had 500 million in October, but with Bitcoin higher and 80% in Bitcoin or so, that's whatever, 600 or 700 million. And then EOS, through Block One has 3 billion. No idea what they did with the other billion because they raised 4 billion, but we'll leave that to people who want to spend their time investigating. How do you feel about those competitors? Like, do you feel like they could, just buy their way into an ecosystem, or do you think that that's not really sustainable?
Well, first off, I think John Corzine should give the $1 billion he took from EOS back. Okay. Jokes aside, I feel like the amount of money that any project has is only one facet of a very much multifaceted crystal here when it comes to what project is significant, which project is going to win, which one is the best. Because what I've observed is this: even Bitcoin only has about half a dozen or a dozen developers who are really doing substantive work. And when I say really substantive, I'm not talking about, you fixed, you moved an icon in the GUI, or, you wrote some test coverage. These are people who are writing protocol level code and, doing it right. The number of people who are capable of doing this work is extremely low. I would go so far as to say that there's about 100 people in the entire cryptocurrency space who are capable of doing substantive consensus level work. Really moving the needle on cryptocurrency technology. Now, there's people who will disagree with me on that front, but I think that what it really comes down to is it doesn't matter how much money you have. It matters how many of these deep protocol level, talented protocol level engineers do you have? And we have several. We have, Dave Collins. He's been hustling on BTC Suite and Decred, DCRD in particular, for years now, ever since 2013. We've got J-Rick. He's been working on Wallet the whole time. We've got Mateus. He is a Brazilian guy who showed up and just, we didn't even go looking for him, and he's really talented. We've got about half a dozen of these people. So it's, that is really the limiting reactant for these projects, not how many hundreds of millions of dollars you have. Now, I say that with an eye to, salaries, which is that if you work with mercenaries and mercenaries demand that you pay, $10 million a year for their salary, well, then you can only hire so many mercenaries. And the approach we take is we try to take the willpower over firepower approach. We're here to change things. We're not here to scalp money and, just get an edge by getting, more salary. We're here to really, challenge the status quo. And the way you do that is by taking the willpower path. And willpower means you don't charge $10 million a year for your work.
How do you think about the Bitcoin companies building today, like Blockstream and Lightning Labs? I mean, they clearly have some serious talent, but on the flip side of that, they took investor money and they're eventually going to have to productize what they build and charge fees for whatever they end up creating. But on Decred, it kind of feels like since you're paid out of the treasury, there isn't really a drive to, say, productize anything that's made. Do you think that trade-off is worth it, or do you think it might be better to, say, take investor money and have like one set focus?
It really is a trade-off. The major trade-off that I've observed is that the major trade-off is exposure. When you get big investors, the real thing that the investors would give you, money's only part of it. People show up and put some money on the table. Okay, great. You can pay some people some salaries and, get an office or whatever. That's only part of the game. The real reason that most of these people, take on investors like this is it makes the exposure process very easy. So if you have King Midas, and I'm just going to use King Midas as a metaphor because I don't want to name any venture capitalists and get them pissed off. But let's just say that King Midas shows up and goes, I want to buy a big stake in your project. Well, that's great because then King Midas already knows all the journalists. He already knows all the PR people. He already knows all the other venture capitalists. So all King Midas has to do is touch the project and go, oh, wow. And it's like all of a sudden significant. And I feel like, that is the real trade-off that you get. The money's only part of it. The real meat of it is you get access to venture capital networks or venture capitalist networks. And, so in our case, we went we took the harder path. We did not go that route. And I think that, in retrospect, I certainly would not have gone the other way. I mean, the reason that we ended up going the direction we did is exactly because of the experiences that I had, say, with CipherTight, which is that I ran a project, and it would have been a great product, but no one cares about privacy enough to pay for it. And the reason nobody cares is because the venture capitalists have basically flattened the storage game. So it's like, okay, I saw what happened here. It's just a race to the bottom. So I don't want to participate in a race to the bottom. I want to build something meaningful. And I feel like if you have to productize it and profit at the end of it, that kind of ruins a cryptocurrency. That said, I really do like Lightning Labs. And it's not just because they built on top of our BTC Suite libraries. I think that Lightning Labs is really moving the peg forward because the work they're doing will feed a lot of value back into, say, Bitcoin or Decred, another project that has activated, or that's running their code.
It's a great segue. So you guys voted on Politeia to enable Lightning support. What does that actually mean? And do you now support Lightning Labs implementation, or do you have to say go build out your own, or was this a consensus or a protocol change to enable it? How exactly does that work?
So in order to support Lightning Network, there's three things you need in terms of, and this is in terms of transaction script. So there's the Bitcoin transaction script, and there's three components that you need to support Lightning Network. First, you need check lock time verify, and that's the ability to lock coins for a predetermined number of blocks. Then there's check sequence verify, which allows you to lock coins for a relative number of blocks. Then there's a third component, which is you need a malleability fix. We went live in February 2016 with a malleability fix and with check lock time verify. However, we did not go live with check sequence verify. So we actually had a consensus vote back in, I think this was late, Q4 2017 to activate check sequence verify. However, we overlooked something. There was a bug. And in order to fully support LN, there was another tiny change we needed to make, which we put up for vote just recently and activated. I think it was about a month ago, just about a month ago, maybe 3 weeks ago. And so we have support for Lightning Network now on mainnet, and it's been activated. In terms of the software, LND, which is the software from Lightning Labs, we had been working porting that to Decred since roughly December 2017. So it's been about a year and a half. And about 2 months ago, it was gotten to the point where it was working on testnet through the efforts of Dave Collins and Matthias De Giovanni, who I mentioned earlier. So we have the full Lightning stack working. We haven't tested it nearly as thoroughly as the Bitcoin people have or Lightning Labs have. But we have that full stack available, and it could be deployed on mainnet. But we're working on some stuff on testnet, and in terms of hunting bugs for a bit longer before we really try to roll anything out on mainnet.
That's exciting. So just playing devil's advocate, I mean, even if you guys did roll out Lightning and support and stuff like that, I kind of feel like the point of the Lightning Network is to have, one implementation that attracts a lot of capital, so it makes it easy to send transactions back and forth. Would that be competitive to, say, Decred's implementation, or would you guys be like interoperable with whatever implementation Bitcoin ends up using in mass? Or
well, right. So one way to think about Lightning Network is if you're familiar. So electromagnetic communications. There's radio. It started out, you broadcast, but then it ends up that there's literally, and this is where the term bandwidth comes from, there's only so much bandwidth to communicate on. So people observed, well, what can we do to, parallelize communication and, not jam up all the airwaves, which is that basically you put radio in a channel, like inside of a wire. And that is really roughly how electromagnetic communications work today. Instead of us broadcasting everything wirelessly or over radio channels, we put the radio inside a wire and send it over the Ethernet cables and over fiber optic cables. Lightning Network is roughly the same process occurring in the context of a blockchain. A blockchain is like a radio in the sense that there's a lot of bandwidth limitations. And so if the bandwidth, if there's only so much bandwidth, then it begs the question, well, where are we going to go from here? And the reason I say so much bandwidth is if you make really big blocks, everything goes into data centers, it gets really centralized, and it kind of breaks the network. So Lightning Network is very similar to, routed telecommunications, in that you have to take the ideas that you had on-chain, or the radio in this case, and put them into an isolated channel so that they can be multiplexed and routed. And I feel like Lightning Network is really the only path forward for scaling. Now, in the context of Decred, we don't need it to scale, but there's a whole bunch of other, because we don't have the transaction volume of Bitcoin, but there's a whole bunch of other added benefits that come with Lightning Network, like the ability to pay for things in person pretty much instantaneously, or the ability to get higher transaction privacy, so that if I want to pay for something online or in person, you don't know how many Decred I hold. You'd have to guess, and so Lightning Network, there's a lot more to it than just scaling or, the idea that there's only going to be one network of it. I mean, my thought is that it's sort of like if your network is sufficiently substantial, you are going to need to do Lightning Network or some other off-chain payment technology.
Yeah, totally. And shameless plug here, but we have a full Lightning report that's recent on DelphiDigital.io, but that's separate. But going back to Politeia and you guys voting in Lightning, what other proposals are live today that people are voting on, or are there any in the future that you're excited about that you're looking at now?
Yeah, we're actually so the way things work with Decred is sometimes things sync up, and this is an example of them. We have a little bit of a synchronicity going on here, and what seems to be going on is that we have 4 decent proposals all going up at the same time right now. One of the projects that I had proposed recently was the idea of setting up a decentralized exchange that's substantially different from the other ones that have been proposed. Just very, very quickly, the idea is to make order settlement more fair by using pseudo-random order matching, to reduce friction for getting listings, and then to remove the rent seeking. We have a specification document up for that that's being voted on right now. In terms of paying for the specification to be written, there's open source research, an open source research proposal that's up. Ditto has their second phase 2 communications proposal up. And they've done good work so far, and so they're going up for another 6 months of us committing to them for PR work. And then we also have a consensus change to include filter commitments in the block header, and that's really interesting because Bitcoin has talked about this for a long time in BIP 157 and 158. And so this idea of a committed filter has been discussed now for the better part of 2 to 3 years. And the direction it's going is that it's very unlikely that Bitcoin is going to do this because it would actually be a hard fork change. And anyone who's really familiar with Bitcoin knows that the reason they don't make hard fork changes is because once you make one, the emperor has no clothes. I won't go any further on that comment, but we will have that change in the not so distant future, whereas, say, Bitcoin can't make that change.
Gotcha. That makes sense. So there's definitely some interesting proposals on Politeia, but I want to get into a problem that could arise. I mean, do you have any concerns on, somebody having a zillion tokens or majority tokens and swaying votes, or is that not so much a concern? I mean, I feel like that is a concern with on-chain voting, but the flip side there is if somebody were to acquire that many tokens to swing a vote or control a network, if they were to make bad decisions, the value of their tokens would then be way less so. So do you have any concerns there?
The system we've set up is intentionally open, which is that, hey, let's say you're a total idiot and you've got a giant pile of money and you want to buy a bunch of Decred and make awful decisions. You are welcome to do that. I wouldn't, maybe I'd prefer that you didn't do that, but there's literally nothing we can do to stop you. And that's really the big idea behind Decred, which is that, Bitcoin made, time stamping a game and made that process permissionless. We are making decision-making a game and making that process permissionless. So sometimes, people are going to show up and do things that you don't like. It's just bound to happen. And, psychologically, I'm ready for it. But so far, I'm pretty happy with the decisions that our stakeholders have been making collectively. And in terms of, people having, quote, too much influence, there's always going to be someone out there who's going to complain that, someone else has too much influence. But at least in the context of Decred, it's linear. There's nothing stopping that person. You want to, hustle, stack Decred, participate in, sort of level up in our ecosystem. You can do that. There's not, there's very few barriers up for to stop you. Whereas, let's say you're trying to accumulate political power in a nation state. That's incredibly difficult compared to, participating with Decred. So, hey, there's always going to be bad actors. Sometimes they'll show up, but just like you pointed out, they have to act against their own best interests in order to negatively influence the project because of the way the staking system works, where the interests of the people who are holding the stake should, in theory, be aligned with the people who are, with making good decisions for the network.
Understood. And, zooming way out here and kind of closing out a bit, how do you feel about the whole Bitcoin with the winner take all or winner take most argument? I feel like it resonates with people because, currency store of value, we have the US dollar, it's a global currency, it's, winner take all here. How do you view that when you're going against and basically competing with Bitcoin itself?
I think that it's easy for people to say things that seem true. For example, the US dollar will always be the world reserve currency. No, it won't. You have to look back a few hundred years to see what the pattern is, but the pattern is over time these things fall off and, the dominant, whoever the dominant force is falls over time. Bitcoin is, currently the biggest network, but whether it remains the biggest network is a really big question mark. I mean, I view the main strength of Decred, its ability to adapt and flex. The security is nice, and then, the sustainability is another important facet. But to me, the ability to adapt is what really sets us apart. And, we have a process for that. And in the grand scheme of things, winner take all, I think that's very unlikely. I think it's probably going to be more like a winner take most. In the, if you look at, say, the banking world is run by, there's a bunch of smaller banks that are sort of irrelevant. And then there's a handful of larger banks that are very important. And my expectation is that cryptocurrencies will likely go the same way. There will be a handful of cryptocurrencies that are really substantial and, people have a lot of value stored in. And then there's pretty much the rest of them. And they're sort of like, it's junk. So the idea of Decred overtaking Bitcoin, it's a tall order because if for no other reason than the size of the network and the way the awareness works. But, from the perspective of being one of the few left standing, say a decade or a few decades from now, I think Decred really has a good chance of being amongst the few left standing that are significant.
That's reasonable. Just playing devil's advocate here on the other side of things, is there any one event that could happen to Bitcoin that you think could lead people to Decred? Bitcoin's obviously had its share of events that it's survived. Take your pick, but and it's still going, it's still moving forward, the hash rate's growing. But is there anything, say you think could happen to Bitcoin, some astronomical event where it couldn't bounce back from and people would be led to, say, Decred?
I think that what's more likely to happen, rather than sort of a monolithic single event, I think that what's more likely is that over time, what we're going to continue to see is Bitcoin not adapting. And the reason I've danced around this and made a couple comments, is that Bitcoin is, because they've constrained themselves to say we only do soft fork changes. That is a huge constraint, and that really sort of ties people's hands, as if engineering in the context of cryptocurrency wasn't already sufficiently difficult. To also go, well, you can't make any hard forking changes. That is really your hands are. It's like it's like you're trying to build the future, and your hands are tied behind your back. And I think that over time, what you're probably going to see is that Decred will continue evolving, and every year or two, we're going to make another change, and over time, Bitcoin likely will not make these changes, and they'll be able to. They have great engineers, but I think that their inability to adapt is going to be a major constraint. And something else that if there were one event that could really crumble the tower for Bitcoin, it would be Bitcoin Core or Blockstream making hard fork changes. And now the reason I referred to this as the Emperor Has No Clothes event earlier is that my suspicion, and I don't, I'm sort of on the outside when it comes to Bitcoin at this point, is that the reason hard fork changes are not allowed in Bitcoin is not because they're really a bad idea, but because it calls out the extent to which their governance system is by fiat. So if Group A can make hard fork change X, why can't Group B make hard fork change Y? And as soon as you open that Pandora's box of, well, what's your formal governance mechanism? The only mechanism that they have built in to use for resolving disputes is proof of work. And proof of work, as anyone familiar with Bitcoin is aware, is run by a handful of people with massive like ASIC warehouses in places where energy is really cheap, like say certain parts of China. What is it? I think there's a place near Austin now, Mongolia. There's all sorts of strange places where this stuff is run, but it's run by a very small number of people. So in the event that something, these changes start happening, then it begs the question, who is really in charge and who has the sovereignty to make the decisions? And they don't want to do that by implementing hard fork changes. So, that's my sort of projection for what would happen is if Decred were to ever, overtake Bitcoin, it would be because Bitcoin's hands are tied, not necessarily because of one single cataclysmic event.
No, it's an interesting take. And, full disclosure, I own Bitcoin and Decred, but I like that your take on evolution. I mean, I'm big on crypto evolution. I've written about it on Medium and had a couple of readers there. But, I guess my take at a high level is you need to be able to evolve over time, but base layer one should get to a point where, hopefully they shouldn't have to evolve and evolution could move up the stack. But that's obviously contingent on, layer two being able to evolve because it's tied to layer one. If layer one doesn't allow that, then you obviously can't evolve on layer two. But I guess the way Bitcoin's moving is Lightning is, somewhat taking off here. So I guess it kind of throws in the face that Bitcoin can evolve because I think it can, but I think it's definitely, like you said, it's definitely not easy.
Yeah, the constraints are real, and they're serious. And anyone who's spent time developing in the blockchain space knows that as much as people want to wave their hands and say, spew shower thoughts all day, the reality is that the engineering is very difficult because of all of the constraints. So to even have a constraint in place like no hard forks, it's like, wow, that really ties your hands. I mean, for example, let's say Bitcoin wanted to change out its transaction script system. That's a hard fork change, and what was it? The simplicity system that's been proposed by Blockstream. It's a really excellent proposal, but it's a hard fork change. So it begs the question: is that ever going to land in Bitcoin? So these questions will keep coming up, and I'm for one interested to see how it all shakes out. I'm going to keep doing what I'm doing.
Yeah, no, I'm bullish on both of you guys, Bitcoin and Decred, but I definitely think about the evolution issues a lot with respect to both protocols and all of them. And, I also look at Tezos and Ethereum a lot, and I, wonder how fast they can evolve as well. And I mean, I feel like Ethereum has, some of the best, if not the largest development community in the world right now for crypto, but they're also facing issues with, implementing those changes. And I feel like through Politeia, you guys have somewhat of a curation mechanism there on what should be changed and what should not be changed as well.
Something that I think is challenging for Ethereum is that because the reason we focused on governance beyond the fact that we saw the problems with Bitcoin is that it's a very difficult thing to add after you've launched your project. So once your project hits a certain scale, like, let's take Ethereum. There's a handful of people in Ethereum who are effectively the oracles of Ethereum, and whatever these people say goes, like whether it's, Vitalik or Vlad or whoever. These people have an enormous amount of informal sovereignty in the system. So it begs the question, what incentive do they have to implement quickly and reasonably a system that could very well substantially diminish their sovereignty? So, I feel like Ethereum's kind of stuck in that regard. That is that they want to change, or at least they externally claim they want to change, but then changing would sort of shake things up for them big time.
Yeah, totally. And just another annoying disclosure, I do own some Ethereum and Tezos, and no, that's a good point. I guess it is difficult for leaders who not only have big social stakes, but huge monetary stakes to basically make changes that could then limit their power. I feel like that's not human nature to begin with.
Yeah, I mean, everyone has an ego, whether it's me or you or anybody else. And, I don't know. I've worn the crown for long enough that I'm keen to sort of find a way to decentralize the crown. It's like, I don't want to be in charge forever. And some people who are younger, who are newer to the game, really do want to be in charge forever. And I feel like they're mistaken if they think they're going to be able to deliver great decisions for indefinitely. At some point, everybody starts to screw up or slip up, or their life changes, or something bad happens to them, and then their decision making skills go to crap. And I think that my ego is bounded enough to recognize that, hey, eventually I'm going to not be such a good leader, so I may as well engineer against that in advance.
Yeah, no, I mean, that's why I've never been a maximalist in anything, to be honest, just to bound, and make sure that I'm continually innovating and looking at new things. But to your point, I mean, I think it's worth it not only to pass on the crown, just because of decision making go bad, but just because to pass on to the next generation of people who could, think differently and grow the platform to the next level.
That's an excellent point, and that's why I'm not a fan of pension funds. So I think that's a little out of scope for the for the podcast. So I'll leave it at that.
Yeah, and Jake, I've had you for a while, but I have one last question for you. How was it getting involved in Decred, co-founding it back in years ago when you were dealing with anonymous like IngoSec and Taco Time? I mean, how was that? Because it's kind of reminiscent of like Hal Finney dealing with Satoshi in a way. Obviously, this isn't Bitcoin, it's Decred, but I mean, I feel like, you're one of the few people that had one of these beginnings online anonymously and, dealt with these developers as well.
I think that it's been a very interesting process dealing with people whose identities I am not certain of, or whether they are actually groups of people posing as a single identity. it definitely creates barriers in terms of the sort of the social, like normally you're like, hey, so and so, how you doing, man? And the game is definitely different when you're like, hey, person who is probably three people, who pretends like they're one, how's it going, guys? Like it creates weird dynamics, but I really enjoyed the whole process. It was exciting. We've ended up with something really, what I consider to be substantive that came out of it. And that's really, I guess that's really all you can hope for when you're dealing with people who are, pseudonymous or anonymous.
Yeah, no, that's funny on dealing with groups of people. I love that. I mean, I always thought that the NSA created Bitcoin, but I always get a lot of pushback on that because of, just the timing with the financial crash and everything. But after I saw that movie 0 Days where the NSA created the virus to overspin the turbines in Iran or whatever, I was just sold.
Well, I mean, what is it? You do need a new world reserve currency. At some point, the US dollar is going to go away. And then another question is this: who would be most incentivized to develop a parallel system where you didn't have to, say, wire money over, if you wire money anywhere on the planet, it's monitored by no less than two counterparties, the country you're wiring it from, and then the country where you're wiring it to, if not several intermediaries, or anyone who can access the SWIFT system. So it begs the question, who is in a position where they would be highly incentivized to develop a parallel system for the storage and transfer of value? So, that question sort of was cued by your answer.
Yeah, no, totally. Well, Jake, this has been insanely awesome of a podcast. I really appreciate your time and everything you're doing for Decred, and hopefully I'll have you on again soon before you pass on the throne.
Excellent. It's been a real pleasure being on here, Tom. Thank you so much for having me.
Hey, everyone. Thanks for listening to the podcast. Please rate and review to help other people find it, and shoot me a follow at Shaughnessy119 on Twitter. And be sure to visit delphidigital.io and use coupon code ChainReaction to make sure you receive all of our research analysis.